All right, guys and gals, it's newsletter time. Welcome back, welcome back. My name is Joseph James with your nightly newsletter for October 8th, 2014, a Wednesday evening here, broadcasting live from our corporate headquarters here in a very sunny afternoon, I should say, here in Los Angeles, California. Hope you guys had a great hump day here in the live trade room today. Boy, exciting price action. Before I get into everything that happened today and get you guys some strategies for tomorrow, let's take a moment to remind you guys, make sure you're watching this video over here at sidewaysmarkets.com. Get over here to Sideways Markets. There's a link below the video if you're watching this on our YouTube page right now. Make sure you're watching this video on our blog at Sideways Markets for 3 specific reasons. The first reason here, you can download all of my charts I'm going to show you guys today. All the charts that I go over tonight in the video, you can download as well, have them ready for your trading session tomorrow. And of course, you can come out and join me at 8 a.m. tomorrow in our live trade room, and we'll be using those charts as well. So download those charts below the video. Second thing here tonight, grab a copy of a free pass. I have a special invitation to come out and join me in my live trade room here this week as a guest of School of Trade. If you're not a member of School of Trade and you're curious, what does it feel like to be inside of our trade room? What does it feel like? What does it sound like, right? What does it look like to be a member here at School of Trade? Or how do we use these charts that we talk about every night? I got a free pass to attend our live trade room. Take me up on that offer in the upper left-hand corner. Third thing here, lower left-hand corner, right above my ugly mug, you'll see a spot there for your name and your email address. Give me your name and your email address to register for your nightly newsletter mailing list. Now, if you grab your free pass or if you register for the nightly newsletter mailing list, don't forget, I'm going to send you a verification email just to confirm your email address. So make sure you check your email once you register. So 3 things here. Get on over to sidewaysmarkets.com. If you're not watching this video on our blog right now, download the charts below tonight's video. Grab your free pass to attend the trade room tomorrow. And of course, never miss another newsletter ever again by joining our email list. Alrighty, ready to rock and roll? Boy, what an exciting day we had today. Just like we thought, though, again, go back to last night's newsletter. Just like we thought in last night's newsletter, today was going to be a little bit of a sleeper until what? Until we had the FOMC meeting minutes at 2 p.m. Eastern time. So markets began relatively sluggish. We did have some very nice moves in the overnight session. Again, we pretty much nailed this down pretty well last night. We expected some moves overnight because we had big news out of China, big news out of Europe. Equity markets push lower, crude oil pushes lower, gold stays sturdy above 1,200. Kind of sat there today. We went through crude inventories at 10:30. That was a huge build in inventories. Demand was lower. And then all of a sudden, we go to lunch, come back, 2 o'clock, bam! All of a sudden, FOMC meeting minutes are released. If you read through the meeting minutes, basically what you heard was we are very worried about 2 big things right now, the strong dollar and the weak growth in Europe and Asia. That's what their big concern is right now. The strong dollar concern is it's killing exports, right, here in the U.S., very big business for us here in the U.S., and of course, that sluggish economy in Europe, that also is a very big concern, and they touched on interest rates. Once they started talking about the foreseeable future of keeping interest rates at or near zero, that's when all hell broke loose. Gold jumps. Crude, of course, didn't react that well, right? Crude kept pushing lower, and we saw the biggest one-day rally in the equity markets this year. This year? Really? Wow. Now, reading between the lines, obviously, today was a good example of when bad news is good news for investors in the stock market. What do I mean by that? Well, the Fed meeting minutes talked about nothing but bad news, right? Strong dollar, sluggish growth, very big concerns, right? Bad news, bad news, bad news. And, of course, the smart traders out there, they saw that as a buying opportunity. Why? Because pretty much guarantees that we're going to have low interest rates. We're going to have easy money here until most likely the end of 2015. So we're going to keep that cash spigot, right, with those loose credit standards, well, for the foreseeable future. right? In fact, a lot of the Fed speakers now have been quoted in those meeting minutes as starting to jump on board here for what we call the dovish policy, right? Hawkish would be higher interest rates. Dovish policy would be lower interest rates. So we are very clear at this point now, thanks to the FOMC meeting minutes, we can expect rates to be low for a very, very long time. And it sounds like until Europe and Asia, until they get out of this little slump, it sounds like our Fed is willing to keep those rates low indefinitely, right? To try to help the global economy try to get back on track right now. So great buying opportunities, right, for U.S. equities. And it looks like that's exactly what happened today here on the mighty mini Russell. We had watched this thing go lower here the past, 3 weeks here, pushing down to that low, pushing well below 1100. And as you can see here, as we look at this, we can easily see we're well oversold, right? We're in a clear downtrend. I've got my May 15th low, right? Got our low from May 15th. So we broke through that. And then again, this bad news from the Fed, traders read between the lines and they say, well, that means we're going to have an accommodative monetary policy. We're going to have low interest rates, easy money, which means keep that cash flowing, and you'll probably continue to see people investing in the stock market. So great buying opportunity here today. As you can see, we're headed up towards that 1100 big round number. I have a trend line overhead waiting for us here as the next sell setup. 3 steps to success. Trend is down. The next setup that I see overhead is going to be up at this 1108 area, right? That trend line, of course. That'll be a trend line setup. And then, of course, we get a sell setup here at 1121.9. I don't see us getting to 1121.9 tomorrow, but we've got some other levels we can use here in the meantime. Looking at the Russell, here's my 32 anchor. Take that 64, cut it in half down to a 32. Here's going to be a much easier chart to use for all you day traders out there. If you're looking for long-term trades, we know on the 64, we can definitely tell we're ready for shorts at that 1121.9, right? If you're a long-term trader on the Russell, you'll use that 64 chart. 32 chart, perfect for a bird's eye view for our intraday trades tomorrow. And you can see here right now, we go up, 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 and we're running right into a number of sell zones here. Now, you might be wondering right now, Joe, at what point, if this keeps going higher, at what point do we start thinking we're bullish now? Well, I've got the key resistance level marked up here at 1106.5. And we're going to see quite a bit of this on tonight's newsletter. And I want to remind you of what I call the trend life cycle. And basically what it says is, and this is a little bit of experience and a whole lot of being a student of technical analysis. And basically what we're seeing right now is we're seeing this market, right? It's gone lower and it's jumped up higher here now. So what I've got is I'm going to look at this high right here. That's my line in the sand. And as soon as I can get up to that high, I'm definitely going to try to sell, right? So we're looking at this as a possible short on the Russell, and you're going to see this as a possible short on gold as well. But the reality is I'm not going to feel confident calling this a bullish market now until we get a new high, then pull back, and assuming we don't collapse back down in, once we start going higher now, that's when I start calling this a bullish market again. All right. So right now we are ultimately dancing around inside of this range right here. Okay. So keep that in mind right now. We're not quite out of the woods yet for all those bears out there, right? And you can see that 1106.5, that's my key level of resistance. Honestly, guys, I do not doubt us getting to 1100. I really wouldn't doubt it. And on the next chart, I'm going to show you why. But obviously here, though, we have a downtrend. We're still getting lower lows and lower highs. I've got one of my clouds turned green. No surprise there. we are actually just snuck right above that long-term bearish cloud. So, again, the cracks in the sidewalks are starting to show for those bears, but we're nowhere near calling this thing a bull market here yet. So back off the ledge, turn off the television set. Don't believe the guy jumping up and down on CNBC. We're not quite ready for the rally yet. We probably will keep going higher, but I've got 3 easy areas waiting for me now overhead that I'm going to be looking to get short at. So as we go lower though, right, so if we go higher, I'm looking to keep selling. I'm not going to start buying until we get a what? A break above, a pull back, and a continuation above that 06.5. And if we do get a chance to grab this thing short here, I've got targets waiting for us here, 1077.3, 1067.6, 1060.5, and of course 1047.5. Not out of the woods yet here on the sell side, and you can see here we got a little bit more work to do there by the buyers before they can go claiming victory here from the sellers. Now, why was I so confident in price getting to 1100? Besides the fact that it's a bull market, or besides the fact that the bulls are going to look for any excuse right now to buy, besides the fact that we have a big round number acting as a price magnet? Well, it's pretty easy when you look at the volume. We use volume divergence quite often in our trade room looking for reversals, and you can see right now that we have higher highs in price, higher highs on the indicator. That clearly tells us that these buyers continued to buy all the way into the close here today. So volume stayed strong into the closing bell, and because we made those new higher highs, I would expect this price to gravitate towards that 1100. And remember, that area up there still isn't bullish yet, right? Go back to that 32 chart. And remember, it's the 1106 we've got to get above. And then I get kind of a line in the sand here, right? I would say that prior high will definitely be a line in the sand, right? If we get back below that, definitely going to start seeing this thing sell off here, or at least some short-term profit taking. You can imagine a lot of folks hopped onto that ride, and so you can imagine if it starts to pull back here, they'll probably bail out of those longs, right? So there'll be some profit taken there. Bottom line is, though, do expect the price to test 1100 overnight here or tomorrow morning, but we'll still be looking for that collapse here once the whole honeymoon wears off, right? Once the euphoria wears off from the FOMC announcement that was at 2 o'clock today. On the Russell, you did good to us today, Mini Russell. Let's take a look at here at that funny yellow metal. Moving over here to gold futures. Now, again, we've been flirting with these lows from January earlier this week. We've had very, very good success short selling on gold here in this newsletter over the past few months. And you can see here we are well oversold in this downtrend. Most importantly, though, we're propped above that 1200. Now, we know that 1200 is the break-even point for the mining industry. Today, the FOMC meeting minutes confirmed we're not going to see higher rates in the U.S. anytime soon. And remember, low interest rates are bearish for currencies and bullish for the yellow metal, right? Think about it. Low interest rates, what will that do, right? It deteriorates the value of $1, right? If we got low interest rates, if I can borrow money as readily as I want, that means the cash becomes abundant. Whatever's abundant, there's more supply, and of course, higher supply in relationship to demand, price will fall. So currencies are not going to be that are going to get hit with that what they're calling accommodative monetary policy, right? Keeping those rates low. With those rates nice and low, right? This should, of course, be bullish for this yellow metal. So it looks like the fundamentals and the technicals are going to keep us above that 1200, at least for right now. And this really should be no surprise, right? I mean, there really shouldn't be any surprise here. 1200 we've known for a while is the break-even point for the mining industry. And last time I checked, the mining industry was just a little bit of a powerful player here in this world of ours. So we know there was definitely going to be some interest there in buying that 1200. It's going to be very interesting to see here what happens on this yellow metal here in the near future. But for right now, though, the fear of this global slowdown, the lower interest rates, right? It's not going to be easy here to keep that gold going lower much longer here until the end of the year. Moving forward here to a 32. Now, we talked about this in the Russell, right? that life cycle, right? That trend life cycle. And here's another example of it. So gold is definitely looking a lot more susceptible here to a reversal than the Russell is. Couple reasons why. The first reason I see that gold is a little more susceptible to a full reversal, to a bullish trend, is we have what appears to be an inverted head and shoulders pattern forming on this chart, right? As you can see here, that is relatively easy to see, right? So we got that neck, shoulder, head, shoulder, and as we draw that out here, you can see here, we're going to start to get some upward pressure here. Now, that's one reason why. The second reason why, you'll notice we are right at that key level of resistance, right? Remember that scenario we talked about on the Russell. So if we get and stay above this 1223.9, right? That's my line in the sand right now. We get above that line in the sand here now. Now, oh, sorry about that. Now all of a sudden, we have the green light now to stay going higher, right? So again, everything coming together here. A little bit of fundamentals, a little bit of technicals here right now. We're definitely not out of the woods yet, though, for those buyers. We got some sellers here that have that sell zone overhead. As you can see, 1230.9 and 1225.5, in addition to, right, this key level of resistance that we'll call it 1224. All right, so 1224. That's going to be your key level of resistance. Then overhead, we've got additional double top here at 32.7, double top at 37 even, right? Those will be some additional sell areas overhead. As of right now, I am still bearish here on gold, and here's another reason why I just don't think we're out of the woods yet. Here we go. Now another example of how we can see we got volume divergence. Indicator does not make new highs, right? Price action does. Volume divergence, by the way, in my opinion, is the only form of divergence that is worth your time right now. Momentum divergence is almost worthless in today's markets. We see price go up, come down, try again, actually successfully made a new high, but you can see, though, unlike those Russell buyers, the gold buyers, they gave up on this thing, and that's probably a little bit of short covering there, right at that low, but look closely at this. Look really closely. What do you see standing out right in the middle there? Yeah, that's a volume spike below the 200 moving average. We got some funny business here in this market right now. What I see right now on gold is up near the highs of its range. It rallied on the FOMC meeting minutes, test the sell zone overhead, but that volume divergence, that's given me some reason to doubt the strength of these buyers right now. Obviously, I can't be 110% sure just yet. I'm going to wait and see what the opening bell looks like tomorrow morning on gold. But again, up near the highs of this range, this is looking like a great spot to be a seller. I thought we had to sell today, didn't we, guys, right? It dropped off that high earlier today, right? Came off that high earlier. I thought that was going to be that big move that we were talking about yesterday. We were wondering why the price action was a little bit stingy this week. Now we know what they were waiting for, right? So be ready here on gold for that counter, right? For that counter from the sellers, and look for this reversal right back off that highs right now. Moving here from gold down to that funny yellow metal, down to black gold here. We get the crude oil futures. We can see we're trying to get down to those January 9th lows all the way down here at 84.64. We hit our next target in the sequence at 86.78 today, and this crude oil continues to get clobbered. We saw a shockingly higher number out of the inventory report today. There's a ton of crude out there right now, apparently. Last night's inventory report, pretty much the same as the EIA number that we saw today at 10:30, confirms there's plenty of supply of crude and not much demand right now. That's what the news report said today. We made a 16-month low today on crude oil futures, and of course, you know what's happening right now, right? The slowdown in China, manufacturing, the slowdown in Europe, pretty much everything around the world except for the U.S. is showing economic slowdown, and that's killing the demand, right, for crude oil. On top of that, we heard from the IMF, they dropped their growth estimates for next year. We heard from the Agricultural Association a couple days ago. They're calling for warmer weather this winter. I mean, it literally is a snowball effect right now, no pun intended, for the price on crude. It just keeps on tumbling right now. It's very difficult to find someone who's bullish on crude right now until we start hearing from OPEC. That'll be the next thing. Right, OPEC's not going to sit around and let this happen very long. Right, they got payments to make on their Rolls Royces, right, and more golden toilet seats to buy. Right, so they're going to start messing with the production on this real soon. This is not going to continue very much longer. I would imagine the worst we get is down to that 80 area. Right, and then I can't imagine we go below 80 here before the end of the year. The last time we saw this happen was on very unique environment, right, back a few years ago when we had some significant downward deflationary pressures around the world. I just don't think it's going to happen. Obviously, though, I don't get paid to think as a trader. So for right now, until we start hearing these headlines about OPEC changing their production schedule, well, we're going to keep selling this baby short. So right now, we're still looking short here on the black gold, still looking bearish on the crude oil futures, and we got exactly what we needed today. If you recall from last night's newsletter, we had this price wedge pegged, right? Remember this last night in the newsletter, we had that range kind of nailed down last night. And my exact words were, we would love to see a new lower low so we could then get it back up, right, and get short. So we're right on schedule here. We would have liked to have seen a little bit better personality out of that crude today because it was inventory day. We kind of gave it, a little bit of a get out of jail free card today. But the reality is we're right where we want to be right now. We keep making those lower lows. With that lower low, now we're going to look for a price to come up here. I have a sell zone, right? So 3 steps to success. I've got my down trend, right? My bearish trend. I have a sell setup here at 88.18. That'll be a reversal line setup. I have a trend line setup or a channel setup, right? We'll call that maybe 89 right now. Right, give or take when we hit the top of that channel. I have a trigger zone set up at 89.31 to 89.90. We've got some symmetry hidden inside there at 90.35. I would give that a few ticks on both sides, right? So 90.30 up to 90.40, right? So give it about 5 ticks on both sides there for that symmetry. It'll be kind of an area of symmetry. And then we have the 90.73, another trigger zone set up. And then, of course, we go into double top at 91.97. Right, so we have plenty of areas here. Look for shorts. 88.18. Again, depending on when we get there, the top of that channel, we'll say 89, 89.31, 90.35, and 90.73. The hardest part right now is going to be staying patient here on crude oil. We saw some nasty price action today. But again, we had an excuse for that because, of course, it was inventory day today. And we know that inventory day is not exactly the best day of the week here to be trading crude. Moving forward here, crude makes new lows overnight. Now we're waiting patiently for price to get off these lows so we can sell at a premium. Right? That's how we do it. That's how any smart business owner runs their business. You don't buy at a discount, right? So you don't buy at a premium, right? You sell at a premium. You buy at a discount, right? No matter what you're doing. So right now we got crude oil that's priced at a discount. We left that price wedge, right? Here was that price wedge that we found in last night's newsletter. And again, if you recall, we needed to get that lower low, right? We had to get that lower low. Once we got the lower low, now we've got the green light here to open up some new sell zones. I've got sell zones overhead here. So we clearly have a downward trend. In addition to that downward trend, I have my 88.05, right? That's going to be a wedge setup. As you can see here, we get a bit of a consolidation going on right now. And again, this is nothing surprising here, right? There shouldn't be anything surprising here that we consolidated today because it was inventory day. right? A little bit surprised that we didn't make a lower low after that huge inventory build, but I'm not going to stress out too much about that. What we do know, though, is that we've got a sell zone overhead. I have a wedge set up at 88.05, double top set up at 88.38. I've got a trigger zone here at 88.79, 89.31, and then we can go all the way up here to 89.90. Also, guys, don't forget, these trend lines are going to make 4 additional selling areas here. So we draw the trend line overhead. Couldn't you see this going up, testing the bottom of that prior wedge, right, and then going back down? Oh, absolutely. The same thing for the trend line overhead, right? So don't forget those trend lines are still there. This is why I left them on the chart. I want you guys to remember those trend lines are still there. Now, obviously, do I see us going from 87 to 90 tomorrow? Well, wouldn't be the first time crude made a $3 move higher or lower, right? So it could happen. We'll wait and see. All I know right now is trend is down. I've got sell setups at 88.05, 88.38, 88.79. Again, those trend lines overhead. And I've got targets waiting for us here to the downside, 86.83 and 85.85. That's all I can do right now, right? I'm not going to worry about it. Won't overthink it. We'll wait and see when we get to those sell zones. We'll wait and see how the price action looks. We'll find the reversal. We'll grab the pattern, and we'll hold for the targets. All right, guys? All in a day's work here at the School of Trade headquarters. Let's jump in here to our news here overnight, right? So tomorrow morning, we got more big news on the schedule. Tomorrow, Thursday here, as we cruise through this second week of the month of October. Now, we're not going to have to wait too long here. We've got major news coming out of Australia here overnight, right? Our good friends down in Oz, they're going to give us the labor force survey, right? This is very, I like how it's called a labor force, right? Here in the United States, we call it the consumer, right? The consumer confidence survey, right? I love the militant, right? The militant designation of that. What's the term? It would be human resource, right? Human capital, right? It's right. We're all a bunch of worker bees out there. I love the labor force survey, right? The human capital survey, like we're bullets in a gun. No, this isn't China. This is Australia we're talking about. That was a bad joke. Anyways, labor force survey, 8:30 p.m. tonight, right? So you can definitely be banking on some movement coming out of the Asian session and then into the early London session. We have more minor news tomorrow morning. I've got 2 o'clock. We get some merchandise trade from Germany and France tomorrow morning, but I would imagine, though, all the meat and potatoes here are going to be right around this 7 o'clock to 8:30 a.m. time frame tomorrow morning. You can see we've got Red Star news from Great Britain. That's the Bank of England announcement. That's just like our Fed announcement, right? Just like we heard from the ECB announcement last week. We've got the Great Britain, the Bank of England, their announcement tomorrow morning at 7 a.m. There's been some very, very big policy changes coming down the pipe, right, in Great Britain right now, and can't wait to hear how that goes tomorrow morning. And then we'll roll right into 8:30 a.m. We got jobless claims. You've heard me say this many times before, guys. I don't think jobless claims have too much of an impact these days. The jobless claims report right now is very similar to the housing numbers in 2009. Very difficult to tell the difference between a good number and a bad number. We heard from the Fed. They confirmed via their JOLTS report on Tuesday that people are getting jobs. They're just getting jobs they wouldn't normally take unless there was other options out there. And most recently, the big one was the transfer rate, right? So apparently people fearful they won't be able to find another job if they leave their job, right? Think about how important that little feature is, that little number in our jobs report, right? That job transfer rate, right? Basically, if you feel scared that if you quit your job, you won't be able to find another one, right? That's probably not a very good thing for the overall workforce, right? Good for the boss man, not very good for the labor force, right? The human bullets, if you will, right? So hardworking people out there feeling trapped in those jobs, and we know the jobless claims right now are being skewed because of all these variables, right, during this recovery of our jobs market in the U.S. Not sure why, but this has not received much attention at all. Tomorrow, Mario Draghi is going to be speaking in Washington, D.C. Literally, I had to add it to this calendar. I feel like I should call a Connor Day and say, hey, pull your you-know-what out of your you-know-where and do you-know-who a favor here, right? Super Mario speaking tomorrow morning in the U.S. at 11 a.m. I'm just surprised we're not hearing more about that right now. Maybe that's a clue for tomorrow. So we know that's a major speaker. He's the head of the ECB, and we know people will likely be waiting to see what comes out of his mouth. And most importantly, it won't be his speech. It will be once the speech is over, he pushes his pre-drafted notes off to the side, and they get the live Q&A. Right? That's where you get the good stuff when the script is gone and all the reporters start peppering him with all these difficult questions, right? So be ready for that reaction tomorrow at 11 o'clock. So we should have a full day of opportunities tomorrow and finishing up the morning here with Mario Draghi. Now, some good news and bad news here for tomorrow. I'm going to be tied up in meetings. I've got some meetings for our fund tomorrow morning. I'm going to be stuck in those meetings with those darn talking heads all day tomorrow. I'll be hanging out with a bunch of suits tomorrow in the office. I got a bunch of clients coming in town here to Los Angeles, our corporate headquarters, talking about our new fund. And I want to thank you guys for being a part of this newsletter this week. I will not be in the newsletter tomorrow night, and so the next time you'll hear from me will be Tuesday, the 14th. Don't forget, next Monday is a holiday, all right? So no newsletter for me tomorrow, Thursday evening. I'll take Friday off, right? We don't do a newsletter on Friday, and then we get a long weekend coming around the corner here. Got Columbus Day, so have a great, great long weekend. Good luck out there tomorrow. Don't forget, follow that trend, find those setups. And before I let you guys go here, I want to remind you guys, don't forget to download today's charts, grab your free pass, join the newsletter mailing list, and don't forget, head over here to SchoolOfTrade.com. We have a free trial. You will most likely learn more in my free trial than you've learned anywhere else on the web. I'm going to prove it to you. Register for that free trial right on our homepage. We offer 3 levels of membership here at School of Trade, and we've got someone standing by here 24/7, 365 to answer any of your questions. Guys and gals, have a great long weekend. I'm sad that I can't be here with you guys tomorrow night for the newsletter. Trust me, I would much rather be here with you guys than sitting in a bunch of room with a bunch of attorneys tomorrow. But that's the way life goes sometimes, and sometimes you got to put the big boy pants on and get the paperwork done. Thanks so much for being here, guys and gals. A fantastic week this week in our live trade room. We're going to get back at it tomorrow morning at 8 a.m. Eastern Time. Come out and see us sometime. Share this information with a friend. Have a great holiday weekend, right? Only in America will we celebrate a guy who had no idea what he was doing, took the wrong road, right? Typical guy, right? Chris Columbus, gotta love him, We're going to India, right? Oh, you know the story. You know the story. Back in 1492. Yeah. All right. Have a great weekend, guys. Columbus Day on Monday. We'll see you Tuesday evening, and we'll have a great day tomorrow in the markets. Adios, amigos. Bye for now.